The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 24th. Magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now it's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. Let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading up 217 points at 20,765. The S&P's up 23 points. The NDX up 60, all above 1%. Russell 2000 up 1.4%. Trading out at 1398. Yeah, one of these days it'll be 1998. The semis are up 14 points. New York Stock Exchange is up 1.2%. The trannies are up 1.3% out there. The VIX index trading out at 1124. It's off 23%. An indication of an initiation move is what we have going on today. Light sweet crude back 29 pennies. Natural gas is down 0.5% out here. Leading the charge to the upside is Bard CR Inc. up $50. That's 20%. I don't know what Bard does, but they're having a good day. Priceline is up $47. Google's up 17. Amazon is up 9. BlackRock is up about 9. AutoZone is up 8.50. To the downside, you got Chipotle off $7, 1.5%. Becton Dickinson, that's off $6.30, 3.5%. Public Storage down 2%, $4 and change. Annie Lennox International, really just Lennox International, down $4.40 out there. So let's begin today. What are the markets doing? Well, you know they're rallying. You know that we bottomed last week. We actually bottomed the week before on Thursday, the day before Good Friday. That was the bottom. Well, that was the bottom inside the NDX 100. It wasn't inside the bottom for the S&P and the Dow, I believe. But let's just go take a look at the equity futures contracts out here. This is a thing of beauty. If you're long, if you're short, really consider that trade out there. Make sure you have some stops in place because these markets are not done moving higher. If we take a look at the ES Mini right now, you'll see that we've had a nice gap up at last night's open. It's all being blamed on the French out there in a positive way. I say the French were just catching up to what we've been doing inside the U.S. stock market. They were catching up to us. It is not the other way around. Who's the dog? Who's the tail out here? Nonetheless, what we can see here in the ES Mini, we've broken through a descending price channel. Those are the red diagonal lines out here. You're above the daily profile. Some might take a look at that candle and say, hey, but Steve-O, it looks like a shooting star. Not so fast. You must account for that gap out there. You must account for the gap. Which one is more powerful? I'm going with the gap. That is called a breakout. Gaps are your friends. Gaps are breakout sessions here. You want to buy gaps right, when price pulls back to those areas. But let's not get too involved with that. Right now, what this chart communicates to you and I, until proven otherwise, is that price wants to get up to 23.97. That's the top of its weekly box. That's the March 1st high out there. That is where the ES Mini is headed to. That's where the S&P 500 is headed to. That's where the Dow is headed to. If we take a look at the Dow, it too has broken above its descending channel line. It's trading above its weekly point of control. That is the little green dash line on my screen out here. That is closer to the bottom of that weekly box. This says that it is buyers in control of this price area. You say, what price area? I say 20,511 to 21,106. That is where the Dow is headed to. Is it going to do it overnight? Is it going to do it without some retracements and pullbacks? I don't think so. It could. But that's not what I'm calling for. I'm giving you where the eventual price target is for the Dow equity futures contract. Inside the NQ, it in essence has completed. It's 1-to-1, very small, by the way. We use the conservative approach for the A to B equals CD pattern. We could have used a much larger A to B equals CD. And when I say much larger, we're talking a tank of an A to B equals CD pattern. That would actually look, let's not do that. Then all of a sudden, I don't want to lose you, and you'll see those prices and you'll say, how can that possibly be? It is going to happen. Likely this year and next year. But let's just stay present with regard to the small A to B equals CD pattern out here. So you've in essence completed the 1-to-1. We are above the swing point, which, by the way, in the NDX 100, or in the NQ, I should say, is April the 5th, not March the 1st out there. So this says, and you came into it with a gap. You got a wide-ish ranging bar out here. Next price target for the NQ is going to be the 55.58, 56.16 level. Those become our price targets. We'll see what's going on with the ES and the YM as we get out there. We take a look at the Russell 2000. Remember, the markets do best when the NQ and the TF, or the NDX 100 and the IWM, are leading the charge. We took a look at charts last week that showed very early on that the IWM was leading the charge. It was outperforming small caps, outperforming large caps. We know that the bullish markets perform best when that is occurring. That had occurred. That still is occurring out here. The Russell 2000 on its way to the 1414 level. It may take that area out. Just depends how quickly we get up there. But the bottom line here, if you take a look at these charts, is every form of resistance that could have been out there is gone. Old resistance could become support, but basically it's gone. And this was not a message because of what was going on in France, for goodness sakes. This was a message that was present last week. It really began the week before at the close on Thursday out there. If we go take a look at advanced decline data, we look at the advanced decline oscillator readings. Those are the bottom panels of these first three charts going from left to right. That's the New York Stock Exchange. You can see the New York Stock Exchange cash index price is now above its descending price channel. This says the trend has changed out there. Its oscillator reading, price oscillator, I should say, is at 77.66. When it gets to the plus 150 area, then the sphincter muscle will tighten just a tad. But if we do get over 150, that is another sign of a huge initiation move forward. There's another chart. I'm not going to there's no reason for me to share it with you today. That will really be the key as to whether or not these markets are going to move higher and for approximately how long. NASDAQ Composite up above zero, up above its highs, referring to the advanced decline oscillator. Same with the Dow out here. This is a thing of beauty. We called $11 in the VIX last week, did we not? We're trading at 11.18 right now. Steve Rhodes with TFNN. During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at this set of charts right here, taking a look at New York Stock Exchange, NASDAQ Composite Dow, and the S&P 500. In the case of the first three, we're taking a look at their advanced decline oscillator readings. It's a very bottom panel. When price is above the zero line, it's a green solid line out there, and they're all above zero, tells you that it is the buyers that are the ones that are in control. Now, the buyers are the ones that are in control. You start looking for areas of resistance, right, where price might get to. So we will continue to do that throughout the show. Is there any resistance that is present right now? No. The market has it's got the freedom to continue to run higher, and everything is actually lined up right now. We talked about the volatility index, you and I, ad nauseum, how the volatility index was giving us the message that the market was forming a bottom, not that it was forming a top, even though it was very frustrating for us. But there were actually some really great clues a week ago, last Thursday. I mean, as good as it gets out there, and that's what we used in order to be able to go along the NDX 100 last Monday at the market open inside the newsletter. Now, if we take a look at that volatility index, it also gave us the confidence to suggest to you a week ago today that we're going to see the volatility index head down to the $11 area. That happens to be I'll get it out. Don't worry about that, because that happens to be the bottom of that Bollinger Band line reading. Right now it's priced at 1109 if you're looking at my data box. It is just a natural, common pattern. I didn't say when it would get down there. I just knew that that was the target. Now, when the VIX index is down at that level, that is where market tops can form. Absolutely is. But you have to be able to put these pieces of the puzzle together. Not that I can't control what the market is going to do next. I absolutely can't. But what we can do is put together a piece of the puzzle that says, okay, logically, what should be the next thing that occurs out here, which is muy importante when we're trying to get our head wrapped around, okay, what side of the trade, what do we do on dips, and so on, anticipate those types of things out here. We also talked about the advanced decline line. Right. Last week, we talked about how on the trading day of April 20th, that the advanced decline line closed at a new all-time high. That's referring to the New York Stock Exchange out there. And you know, because you are a student of history when it comes to the advanced decline line, and you were the one that shared with me, you said, Steve-O, listen, the markets never, ever, ever, ever form any kind of all-time high when the New York Stock Exchange advanced decline line is an all-time new high out here. Hey, guess what? We're at an all-time new high again today out here. And don't tell me that the market doesn't have some folks underneath the covers that are pushing this data up, that it's only 4 stocks or some crazy thing like that out here. There is broad participation in this rally, whether or not you want to believe it or not out here. Here's what I can say about this and share with you with regard to this advanced decline line. Doesn't mean that there's not a retracement that can't happen tomorrow and the next day. What this tells us is there's no major market top in the, let's say, coming this week or next week or something along those lines out there. Major is what I'm referring to. Retracements, we'll look for other patterns so far. But this points to, this is a very bullish outcome as we speak today. Is the New York Stock Exchange above its highs? No, it is not. But the advanced decline line most certainly is. Hey, how about that old Hindenburg, whatever it is out there, indicator, right? The Hindenburg Omen. Remember the last time that we saw one of these, and these often fail. In fact, most times they fail out here. Of course, nothing more bullish than a failed bearish pattern. This one formed back on March the 7th, and it formed on March 7th because we had new highs inside of the New York Stock Exchange, as well as new lows above 45. And we also had price traveling higher than it was 50 days prior. The signal lasts for 30 days. That signal failed on Friday. That was it. Kaput. Now today you've got a gap to the upside. We also have we have new 52-week highs at 235 out here. It's not the highest that we've seen during the last year. The highest came back here in December. Well, that was last year, December 8, 2016. In 2017. I'll give you the numbers. It looks like we were at 331 and 346. We're at 235 right now. So actually, it's looking pretty darn good inside the New York Stock Exchange out there. Okay, what do we want to look at next? So the VIX index right now, what you and I can see, you've got a minus 23.86. That is the one-day rate of change. That is take a look at the close on Friday in the volatility index, comparing it to the price that it's trading at right now, $11.14. You and I, we pay attention to those certainly increases. One-day increases greater than 10%, but we must also pay attention to the one-day, can we call it decreases, that are even lower than minus 10%? I don't even know how you actually correctly say that, because somebody might say less than minus 10% out there and think, well, minus 9 is less than, in any event. You know what I mean. Greater than, and I say greater than, it's really got to be less than, doesn't it? I can't get my head, but you know what I mean. Anything 10% or negative 10%, negative 11, anything that's below that. Okay, we got that. Well, we're at minus 23.86 as we speak right now. If you watch us on Tiger TV, you're going to see a number of different colored arrows. The ones I want you to really focus on here are the green arrows, the green hornet out here. And what you will see is on days like today, 9 times out of 10, it turns into an initiation move. So that's what we have. We have last week on a week ago last Thursday, a clear bottoming signal. Could not get clearer out there. Then come Sunday night when the futures open, it gave us 2 lines of demarcation. By Monday morning, price had cleared one of those key lines that said, okay, it's time to move higher inside the markets. We've had other signals along the way. The VIX is now in line by getting back below the 50-day exponential moving average. We have a one-day rate of change as we speak right now, 125. That's greater than 20%. Again, we've got the New York Stock Exchange, the advanced decline line at all-time highs out there. You're kind of getting the feel that if you're the person right now that is focused on, and I mean focused on, trying to find that next bearish move in the market, I hope it is from a short term perspective, that you are an intraday trader out here. If you are longer term, now is not the time. It's coming. I promise you it's coming. I promise you that 10% or more correction, it is coming. I'm so certain of it that I'm going to do a workshop for you on Wednesday, and I'm going to show you how to actually spot that. But what we must do is we must be present with regard to today's information, and today's information is very strong. If somebody says to you as you're walking down the street, they just happen to be walking down the street, they look at you and you say, there's not much participation in this market. I mean, that happens to me all the time. It's got to happen to you all the time as well out there. You can say, not so fast out here. Because if we do take a look at the QQQ series ETF, trading right now at 134.07, a new all-time high. We're looking at a line chart out here, so we're just looking at closing prices. What you can say to them is, well, if I took those 100 stocks inside of the QQQ series, really more like 108, but we'll just use 100 out here, and I divide those equally by 100, so they're each worth a value of 1% out here. Well, that's what the QQEW is, the equal weighted ETF. Guess what it's at? A new all-time high. Do not let anyone tell you that there is no participation in the markets. That's some boob tube guy who's reading something off the screen who just doesn't know what in the Sam heck he's talking about. Or it could be a she. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So an excellent question inside the Tigers Den has been presented to me. Says, Steve, can you discuss your opinion on why volume is relatively moderate in this market? I've watched the market go up for 5+ years on relatively low volume and only comes down on relatively high volume, which is usually very short-term in nature. So and that's a great question. I wish I had an updated chart for you. I don't think it has changed substantially. In fact, I'm certain that it hasn't. I used to keep track of this data on a daily basis. And then I keep track of a lot of data on a daily basis. And since this one had really given me everything that I needed to know at that stage to really answer that question, I just really stopped keeping track of it. I could get it. But what you're looking at here, folks, for example, we've been talking about the Q series ETF. Which is as good as anything because that is up on light volume. I think if we take a look at the swing point that it is taking out today, you're going to find that it is going to be should have less volume than the last time that that we were up here on the swing point. Now, what you're looking at here is the outstanding shares by day. I used to track this by day, believe it or not, of the QQQ series ETF. You can see that since 2014, and I know you said the last 5 years, but 2014 here, so we can take a look at basically the last 3 years out here. What you've seen is the outstanding shares inside the Qs go down. In other words, the float inside the market is with markets at all-time highs. We don't have more float out here when it comes to shares, specifically inside the QQQ series, but we have less of a float. So if you have less product to sell, right, you have less shares that are out there inside the market. And so this goes for individual companies and the buybacks that are out there. Do you need more volume in comparison to on the left-hand chart or less volume in order to be able to drive prices higher? This is not really my opinion. This is just basic supply and demand. I have been looking, maybe you can find it for me. I have been looking for an entity, some service, something out here that keeps track of the outstanding shares. They can't do it by day. And inside these ETFs you can because of the way that they operate, but just by companies. If we could do this by individual companies out there and truly understand what the float is, oh, what a holy grail you and I can find out here when we start to see some type of tax modification to the system, whether it, whatever the corporate rates go down to, and we also have to compare that to cash flow. We have to make sure that those companies that are paying out dividends out here, that they've got plenty of cash on hand. Right? You don't want to. Anyway, I think there is a perfect storm if we can. But this is my answer to that question. That if you just think about it, if you're a owner of a business, and business is so good out there that you can restrict the supply and still do well out here, to drive those prices higher because you've kind of kept supply off the market, you can keep raising your prices while there's interest in here. You don't have to have the same volume as you did in the past. And the other thing that you and I always have to remember is in our trading pyramid out here, that volume is only one of the legs. Now, you can build a table and stand on one leg. You can ride a unicycle. I can't. I fall flat on my face if I try to ride a unicycle out there. But I can stand on all 4 of my legs out here. And in the trading pyramid, volume or supply and demand is really just one of them. You really want to have 3 additional legs out there to have a nice, firm table, a nice firm base out there. And that means you want to understand momentum. You can use any one of a series of tools for that. You can use a stochastic, or RSI, Williams accumulation distribution, Williams percentage, that whole 9 yards out there. You want to also make sure that you have a tool to identify liquidity, volatility or liquidity, similar type things. You can use those Bollinger Bands. How well does the Bollinger Band work with the volatility index when you understand the patterns that are present there? Calling $11 in the VIX index was the no-brainer. because it was right there. All I had to do was just really read the charts. There was no magic that was created there. And then understanding that energy and the angle. One of the better tools out there is Polar Bears, David White's Power Law Vector Indicator. That is a beauty out there. To the extent that you don't have that, then you got the MACD. You've got Garo's Parabolic SAR out there. So those are just 4 legs. I don't like to use just one and then be swayed by just one out there. But, of course, that's just me. Let's close all those tabs out there. So I hope that answers the question, at least the way that I would take a look at the volume aspect of what's really going on in the market out here. Their bottom line is there are fewer shares on the market inside many of these individual companies that are out there. And there is a huge treasure trove that is going to be released inside the market at some point in time when the current administration is able to get through you and I have talked about it, the version of the 2004 Jobs Act is what they called it. That was just the Repatriation Act. And I don't care what they say you can or can't use it for. They said the same thing back in 2004, 2005. Bean counters are very smart people. They didn't get to be in the bean counting business by not figuring out how to maybe maneuver around the way that rules are written out there. In any event, I know that's kind of like a long way to answer the question out here, but I don't know. How else do I answer it other than to answer it? Okay. I know that there's questions about gold and silver and so forth. So what is gold do? Let's take a look at the good, the bad, and the ugly. What do you want to look at first? Should we look at the ugly first with regard to gold? It's not the fact that it's trading down $12.20 or $12.76. It's not the fact that silver is flat. It's not the fact that, hey, this looks like maybe there's a bottom out here. The ugly is this. Gold priced in other currencies out here. The top chart is gold priced in euros. Now, gold priced in euros, believe it or not, is quite frankly a better indicator versus gold priced in dollars as to what gold is likely to do or wants to do out here. And folks, gold priced in euros is just tanked. It has broken its trend line. It's short-term trend line out here. Has it broken its longer-term trend line? No, there's a longer-term trend right out here. Is that where gold is probably headed to in euros? Yes, probably headed to 1140. Is it going to break through that? I don't know. But I can tell you that this that we're looking at here right now, gold price in euros breaking that trend line, that is not a good signal. Yeah, today gold might fend off the bottom, might have fended off some TAS profiles and some other things. That is not good. That is ugly. Bad is the second chart, which happens to be gold price in dollars. It's a it's a continuous contract, but it's strung together in such a way that it is a very nice way to look at gold. In fact, even look a better way to look at market profiles. But what you can see is, if you really I can tell you that the blue line is now underneath the trend line out there. So gold priced in dollars, that's the real bad thing. Ugly is the chart above it. Australian dollars, for those of you that follow gold price in Aussie dollars out here, that too. In fact, we can put a S load of gold priced in currencies out here, and it just doesn't look good. You look at it in pounds. We'll put pounds up next. Broken. It's looking ugly. Now we'll go back and we'll take a look at a short term and some other stuff out here. But this chart is just downright. It's a beautiful chart. It's just ugly for those that are gold bulls. Steve Rhodes from TFNN with Rick.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 219, S&P's up 25. So back to gold, right? So we've got trend lines. We know there's trend lines that have been broken. Typically in the past, it's not the type of trend line that you want to see broken short term. So we're talking about short term. I'm not talking like 30-minute charts out here. I'm talking, kind of like daily, next few days, something to consider. Now, that's not the only influencing factor, right? You've got the Japanese yen. In fact, well, we just go to the 10-minute charts out here just to make sure that the directional correlation, in essence, is still in place. And as we take a look at it, the answer is yes. The top chart being gold, the June contract, the bonds being the next one, and then the yen futures contract on the very bottom. So we can see just how all these things are working in tandem. So that says, all right, what's going on with regard to the daily Japanese yen? Now we're going to reverse this here instead of looking at the futures contract, only because the market profiles here are a little bit better. And you and I have been talking about this most of last week, how the Japanese yen was completing a Gartley buy pattern. And it was completed the Gartley buy pattern on the trading day of April 17th. April 17th, it forms a little piercing candle out there. That was our bullish reversal signal. Comes back the next day, tests it, rejects also the daily profiles out here, and we've got a brand new weekly profile. Now, this weekly profile has a bearish structure, slightly bearish structure. Those are, let me get rid of the green lines out here. Let me just do this. Although where we anticipate that the yen is going to bounce up to, we were looking at a target of around 112 to possibly 114. Now with the brand new weekly profile that's out here, you and I are thinking more like the 112.12, 112.13, 112.50. 55 area before it would, which is nice because if it's going to get to 114, it has to get over that weekly profile level. Not likely to do it, but it could, but not likely to do it. So I'm going to get rid of the retracements out here, but there is more retracement to come. We can say, look, it's well off of its highs from late last night and That's absolutely correct, but it's also a gap to the upside out here. So this is suggesting to you and I that it still wants higher price, that it still wants to get weaker against the U.S. dollar. This is moving higher. This is getting weaker against the U.S. dollar index out here. It has formed a confirmed Gertley buy pattern, which means it has 5 different outcomes. But first outcome is getting up to, 111.08. Then the next outcome is going to be 112.55 out there, and then we'll take things as we go. But if this continues to move higher, at this stage here, there's no reason for us to not believe that it wants to do that over time. Then that's going to go ahead and put pressure, selling pressure, on gold, silver, the 30-year Treasury out there. Now, it might not be damaging, except for the mere fact that we saw those trend lines get broken. If the trend lines weren't broken, you and I would have a different outcome. We will. Now, with regard to short term, now we're going to really go short term. Why did gold? Gold did the same pattern that you and I take a look at that forms tops and bottoms out here. If we take a look at the bottom, we can see that the last top that formed out here, this is back on Friday, I believe it was. Price was moving higher, doing less relative energy. The bears show up, bearish reversal signal at 2 o'clock in the afternoon, then just kind of trades lower, then kibosh when the market opens last night. But you had your reversal signal before the old crash, so to speak, you want to call it a crash, but the big move down in gold. Really, when it happened out there, and you know this pattern as well as anyone, wasn't there all the indications in the world that gold was going to head lower? To what degree, we don't know. We go back to our daily profiles out here, just like the bottom that came in here at about 8:30 this morning. When was it confirmed? 9 o'clock was when we saw the old bullish engulfing candle form as price was moving lower, doing with less relative energy. So now we're having a nice little bounce out here. But is it really going to be able to is it just trying to get back to the breakdown area before it decides to cruise further south out here? Probably. Price oscillator is below 0. That's not a good thing out here. So can this continue to bounce higher? Absolutely it can. But do we think that this is just a counter trend rally in the move? At this stage, that is what it looks like to me, especially if we take a look at that 30-minute chart. We've got all the makings for a good Thanksgiving dinner out here. I don't even know what that meant. I just had to say it. But we had all the makings for a short-term bouncing type bottom. What I think is more apt to occur, and we'll be watching for on this 2-hour chart out here, is maybe if we can get down and form that 7th wave. And I'd sure like to form that 7th wave with price moving lower, doing with less relative energies, just like on this 2-hour chart out here, as gold was making a high. It was doing it with one of those TD combo 13 counts, price moving higher, doing less relative energy, so on and so forth. So, yeah, I can see a little bit more bounce, but just use stops, be careful. Don't forget, the trend is your friend, and that trend is gone. Sayonara. Adios, amigos out there. Now, with regard to the daily charts out here for gold, it does have some friends. So some friends to consider. Let's go take a look at those friends and where they are priced at out here. Let's do that by taking a look at our market profiles. Let's go switch to the June contract here for gold as we take a look at it. And we can see that on a weekly basis that, price has not gotten down to 1260. 1260 is a likely price target area, and if it closes below 1260, that's bad news bears, because then you open up Pandora's box, and Pandora's box says the next opening is down at about 1151. So watch 1260. It's nice that price is above 1272.80. That's the daily profile out here. So that says, you know what? Hey, bouncing to 1282.60. Very likely, especially when we took a look at that 30-minute chart to see what was going on. But whether or not it's really going to bust through that area, that's not what the profile is so equally distributed here that this is not telling me who's in control, other than price likes that point of control area. We've seen several closes. In fact, other than Friday, the last 3 closes have been right near there. So 1282 to me seems like a magnet. And then that's the magnet where you start to see the kibosh start taking place. If it doesn't happen, it doesn't happen. But if it does, watch that 1260 area, because that is the top of that weekly box out there. With regard to the 240, the 4-hour chart out here, this says, price should be able to get to 1282. So there's another reason to look at 1282 out here. That happens to be the top of its 240-minute boxes formed here during the last 4-hour period. So we've got another signal at 1282. I just don't want you to get carried away in watching this, especially if you're trading some of these intraday vehicles out here, like the triple ETFs for the miners. Understand that what we're seeing out here is just kind of natural short-term bottoms, and now it's really up to you and I to identify where likely prices to bounce to before the sellers, the snipers, come in with those nasty rifles out here. So I'm thinking, and 1282, that area is right where the gap to the downside took place last night. So everything is really lining up out there. So if you're, my opinion, be very, very careful. Okay, so that takes care of gold. That takes probably really the mining equities out there, and you got the feel for the market. So I think we're all set. Maybe we should just play some music for the last segment. Nah. Let's go take a look at something else. I don't know what it will be. I'll go check the emails. I'll see if there's any requests out there. I don't see any in the den. It's awfully quiet for a market that's up 220 points. I would think everybody would be wearing their rally cap. More to come. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're going to go take a look at a chart for Granger Worldwide. Mr. Bill, Granger Worldwide, GWW is the ticker symbol. Mr. Bill in the Tiger's Den asked Steve, GWW, another day down, is there a target? Bill, so you're looking for a bottom inside of Granger Worldwide. So let's take a look at a couple of charts and see if we can help identify where price is headed to. So as we look at this weekly chart, one of the things that we're going to see is that price is inside its most recent swing point. That's the week that began January 18th, 2016. That level is 191.98. So, Mr. Bill, the very first thing that I would say is as long as price closes inside there. Now, the volume there was only 3.8 million shares. And last week, volume blew out of this thing. So you're moving into a swing point with too much volume, 12.4 million shares. You're not going to get that. Well, you probably won't get that volume this week. But any close under 191.98 this week would suggest to me that you're going to go down and test the bottom, at least 176.85. So the answer to your question, is there a target? And the answer would be, yeah, that would be the first target that I would be looking for in Granger Worldwide. If that fails to hold price, then you're going to, and you would also maybe simultaneously, we can do this at the same time. The June 4th, 2012 low at 6.3 million shares, and that ranged from 190.33 to 172.50. So you've got a series of bottoms out here, swing points that should hold. Now, I would feel more comfortable. We're going to switch to a different set of charts out here. Oh, let me put more data out here than what we've got. So let's put 18,000 days worth of data out here. That ought to be enough. We're not going to go look at it, but it ought to be enough. Okay. If I pull this back, what I have on my chart here, because I think, Mr. Bill, I think that you use this too. I just have the TD set up 9 counts out here. So those are the black digits on my screen. And in what we can see is that on Friday, that was our 9th consecutive. That was our setup week, TD setup. When you get to a 9 count, oftentimes in a TD 9 setup, that can be an indication of exhaustive move to the downside, or it can be a real sign of momentum to, in this case here, the downside. It can be upside or downside. When the 9th session is trading with inside sessions 5 and 6, you can sort of see them on my screen out here. If I let me, I don't know how to do this. Control. Here's session 5. Here's session 6, and you can see session 9, we're nowhere near that. That's not good. Versus you come back here, and we can see that session 9 right here, this, when I say here, I'm talking about December of 2016, was trading inside session 5 and 6. It was an indication that there was a bottom that was trying to form. And sure enough, there was. There was a bit of a bounce. We saw price move lower out here. We don't have that this time around. What that suggests to me, Bill, is that the lows of those swing points, they're going to get tested. There is just too much momentum, as really you've pointed out, and so you'll just simply have to take a look at the swing point and volume to make some type of decision. Ideally, you'd see price hold, and then ideally you'd see some type of strength on a daily basis. It sounds to me like maybe you've been looking at this for a while, and you're looking for, you want, maybe I'm just assuming that, but if you're really trying to hold on to this for a while, wait for a sign of strength before you get back into it. That's my call on Granger Worldwide. Folks, thanks so much for being here. Stay tuned. David White is up next. Hey, if you're not a member of TFNN, make sure you get over to the homepage. Sign up so that you can attend my workshop. Just a 30-minute workshop, the best 30 minutes you will ever spend, this coming Wednesday at 5:30. Have a great day, folks. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.